I do not think this is a time to buy the dip. I could be wrong. I'm not an advisor, but just take a look at this. Buy the dip, buy the dip, buy the dip. I've been talking about this the last week. All the way up. It peaked here, then it went below the 10-day moving average. That's the blue, then below the yellow line, which is the 20-day moving average. We're heading toward the red line, which is the 200-day moving average. I think it's going to get there. If it breaks that, it will cross it and keep going. So not real bullish at this point. And this was, look at this candle yesterday, a big green candle, looked like it was going to reverse, looked like we were going right back to buy the dip. And then today, that entire candle got engulfed by a big old red candle. That was before earnings. Sometimes that happens. I think people know ahead of time in a lot of cases what's going to happen. And I think they were bearish. They were right in this case. We had a lot of earnings come out that were short. Look at Intel, for example. These guys missed their top line, they missed their bottom line. They cut dividends and they are letting go a large percentage of their workers. So, not good at all from Intel. Also, if we look at Amazon, we'll see they're down 1.5% during the day and another 6.88% after hours. Not good. People don't seem to have the money they had before. I've said before, I think we're headed into a recession this winter, this late fall winter period after the election. I think we're already kind of getting there. The numbers are going to be delayed because they're 2 to 3 months delayed. Tomorrow's big jobs number, non-farm payrolls, will be huge. I think we're probably going to miss on that, but I'm not sure. I'm going to do some more calculations tonight to get my opinion in there, but I'm holding my shorts regardless because this is the pattern. It's a downstring and it's going right to that 200-day moving average. Now, whether it crosses or not, I don't know. If it does, things will get worse. But I think between now and the election, we're going to get more and more bad data. I think the interest rate lowering has been priced in for the most part. And I think we're a little overbought on the market. So I'm going to be very, very cautious with my buys. I'm looking at this as an opportunity to kind of get things cheaper. I want to get Amazon. I want to buy stocks like Tesla, but I want to see them come down first. So here we are. Looking at silver, it looks like the same pattern. Now, I was short on silver and looking to accumulate, and all of a sudden we had this bounce right here, and I thought, oh my goodness, I'm wrong, and I missed an opportunity to buy more at those lower prices, but I think it's going lower, at least based on this pattern here. When stocks tend to dive, precious metals also dive at times, and I think this may be one of those times. Everybody's expecting this to just go up. We may get a sell-off. Something really interesting, Forex markets are often a forerunner of stocks, and it works the other way around too. They kind of predict each other. You've got very risk-off currencies like the Mexican peso, and it is getting lower and lower. Look at this over the last several days. It's kind of the inverse of the stock market as the Mexican peso continues to fall. If you look at it on the 5-minute chart here, we're falling still after hours. This is a huge move. I mean, and this is a pretty good indicator of stock market going lower or bearish sentiment anyway. You can see here we're very close to that $19 mark for, or 19 pesos, I should say, against $1. If it crosses that, it'll go much higher. That would be very bearish for both the currency and also the stock market. So this is one indicator I'm watching carefully. Meanwhile, I wasn't right on everything. I was way wrong on the yen. It's still going higher. I thought after it got below this range here, it would turn around and start to go up, but it continues to push higher. That is, this is the euro yen we're looking at, and it's diving, probably because of the risk sentiment, risk off right now. Everything is risk off. There's nobody wanting to step in right now and buy things. They just want to wait and see what the market is looking like. Even though technically this thing is way oversold, you can see on the daily RSI way down at 14, actually at 15.78. That's very low. So you would expect a little bit of a dead cat bounce or something like that. But I don't know if that trend will go very far in this market because we are risk off. And I see no reason really to change my analysis that we're heading into a recession, late fall, early winter. Look at this chart depicting quits, right? People quitting their jobs. It was it was hitting a record high because people were finding other jobs and they were getting more money. And now all of a sudden it's harder to find a job. They're not quitting as much. It used to be where you can, tell your boss you didn't like them, go find another job. It would take you about a week and you'd get a raise and everything was great. It's not happening right now. Quits are going down and down and down. And we get more data on this tomorrow with the non-farm payrolls. I'll bet you that trend will continue. Bottom line, I don't think this is a time to be a stock hero and buy the dip. I think this is a time to be patient. Look at this volatility index here. We're spiking up. Things are happening. We're risk off right now. Just be patient. Even if you're in the mood to buy stuff, just be patient and wait. That's the approach I'm taking anyway. So take it easy out there. I'll have more information for you tomorrow.